Welcome back to the Deep Dive. We're all about cutting through the noise, getting you the core intelligence you need. Today, we're stepping into, well, the really high-stakes world of finance, our mission. We're digging into Jack Schwager's classic market wizards to pull out the common threads, the real secrets behind some of the world's greatest traders.
Yeah, it's a fascinating area because, their success often looks like magic from the outside.
Oh.
People see these huge returns and think, is it genius? A crystal ball? Or maybe is it something deeper, something about behavior, psychology, things that, well, maybe you can learn. We're trying to distill those gold nuggets, the stuff that applies whether you're trading futures or just, managing your own 401k.
Exactly. Forget just the numbers for a second. We're looking at the discipline, the mindset, the rules these legends live by. These are people trading huge sums, impacting global prices even. What makes them different? Okay, so let's jump right in. The first big lesson, and it's kind of surprising. There's no single magic formula, no holy grail.
If you're looking for that one perfect strategy, Schwager basically says, forget it. It doesn't exist.
So what did he find?
Well, what's really striking is just how different their successful approaches were. I mean, completely different styles, sometimes even contradictory ones. You've got the pure technical traders on one side. They live by charts, data, price patterns. They couldn't care less about a company's earnings report.
Right, charts are everything. And then the polar opposite.
The die-hard fundamentalists. These guys are deep in the weeds of balance sheets, company analysis, global economics. They think charts are, like you said earlier, maybe just noise, tea leaves.
Okay, so technical versus fundamental. What else?
Even how long they hold trades is all over the place. Some are in and out in minutes, literally scalping tiny moves. Others are looking at the big picture, holding positions for months, sometimes years, writing massive global trends.
Wait a sec. If their strategies are so different, some using charts, some ignoring them, short term, long term, doesn't that kind of imply the specific strategy isn't the most important thing? Maybe it's more about, I don't know, sticking to whatever strategy you choose, consistency.
You nailed it. That's the key insight, really. The method itself seems less critical than finding a method that clicks with you. With your personality, your tolerance for risk, how you see the world, you don't need the magic formula. You need your formula, one you deeply trust and can actually follow without freaking out. If your trading system keeps you up at night worrying, it's the wrong system for you. Doesn't matter if it made someone else a billionaire.
Ah, okay. So it's about that alignment. Method and mindset have to match up. That's the foundation. Okay, let's dig into that a bit more. Let's meet a few of these wizards and see their specific philosophies in action. How about we start with Bruce Kovner, global macro trader, big name.
Kovner is a perfect example, especially dealing with huge global shifts, interest rates, politics, central banks. He trades entire economies, basically. And for him, it all starts with defense. He's a genius. Risk management, period.
He's the one who said, I know where I'm getting out before I get in. Wow. That requires serious discipline. Facing the worst case before you even think about the profit.
It's the ultimate defensive move, isn't it? He hammers home, never trade so large that one bad trade can take you out of the game, ruin you. It's like he builds this external rule. He decides the risk limit when he's calm, rational. So when the market goes crazy and panic sets in, his emotional self doesn't get to make the call. The preset plan does.
That externalization, making the decision before the heat of the moment, that's huge. Okay, sticking with defense, but maybe adding humility. Paul Tudor Jones, another legend.
Jones is also big on defense, but he frames it very psychologically. Always questioning himself, his trades. No room for ego. He's famous for digging into market history, looking for patterns, similar situations, so he doesn't get caught completely off guard.
So he's using history as defense, not just trying to predict the future. And that leads to, what? Getting out fast when wrong.
Exactly. He's not afraid to say, oops, I messed up, and just cut the position fast. He knows ego is expensive in the market, probably the most expensive thing.
Absolutely. If you ignore that, you walk right into what Etsukoto talked about.
Oh, yeah. Sekoda, pioneer in computerized trading, trend following. His philosophy was intensely psychological. He said, win or lose, everybody gets what they want out of the market.
Whoa. Okay, unpack that. That sounds deep. If you keep losing, you're somehow wanting to lose. What could you possibly get out of losing money?
Well, it could be a few things, couldn't it? Maybe confirming some deep belief like I'm not meant to be rich or I'm just not smart enough for this. Sort of a self-sabotage thing. Or maybe it's avoiding the huge pressure and change that comes with massive success. Sounds weird, but it happens. Or maybe it's just the thrill, the adrenaline, holding a losing trade, hoping for that miracle turnaround. That's excitement, even if it's destructive. The market rewards discipline, but maybe some people crave the drama.
That really puts Seikoda's famous rule into perspective then. The three most important elements of trading.
1, cutting losses, 2, cutting losses, and 3, cutting losses. That's the practical antidote to those dangerous psychological desires. It's just non-negotiable.
Cut your losses. Simple but not easy.
Okay, one more example. Michael Marcus. His story is about the journey, right? Not just the destination. He turned $30K into $80 million. Yeah, but the real story isn't just the final number. It's that Schwager mentions he blew up his account several times first. Think about that. Not just losses. Blowing up means, possibly hitting zero, having to start over, rebuild everything multiple times. It shows mistakes, even huge ones are part of it. But the key is persistence plus learning. He didn't just keep making the same mistakes, he learned. So we've seen these really different styles, right? Kovner's calm macro view, Seikoda's trend following. They seem worlds apart. But here's where Schwager's work gets really powerful. Despite all the differences, he found these really strong common threads. The underlying behaviors, this is kind of the secret sauce, if there is one.
Right, this is the shared operating system, the human element needed to win consistently. What's number one?
Discipline. No surprise there, maybe. Every single wizard talked about having a plan and, crucially, sticking to it. But it's not just willpower. Like we saw with Kovner, the real trick seems to be externalizing the rules. Building a system so it makes the decision, not you in a moment of fear or greed.
Yeah, it takes the emotion out. Like Kovner defining the exit point beforehand. The rule is the rule. You just execute.
Exactly. Okay, second thread, patience. These guys aren't itchy trigger fingers. They're not trading just to trade. They see protecting their capital as job number one. So they wait. They wait for the really good setups, the fat pitch, where the odds feel heavily skewed in their favor. They don't force trades.
Yeah, overtrading comes up again and again as a killer. If you feel you have to be in the market constantly, you're probably driven by something other than profit, like that need for excitement Seikoda mentioned.
Third thread, passion and hard work. This isn't a side hustle for them. They're genuinely obsessed with the markets, the puzzle. That passion fuels the incredible amount of work required, the constant learning, researching, refining their approach. It doesn't feel like work because they love it.
They're lifelong students of the game. And the last thread, we touched on it with Paul Tudor Jones.
Humility, the willingness to be wrong. You just cannot let your ego drive your trading. The market does not care what you think or how smart you are.
It'll humble you quick if you let your ego take over.
Absolutely. So they admit mistakes quickly. They cut losses. Protecting capital always comes before being right. Focus on being right. You'll likely end up broke. Focus on not losing big. The wins tend to take care of themselves over time.
Okay, so bringing this all together. Markets change, technology changes, algos get faster. But human psychology, that seems pretty constant. So what does all this wisdom from the wizards mean for you listening right now, whether you're actively trading or just managing your long-term investments?
The lessons are surprisingly universal, I think. Let's boil down the key takeaways from Schwager's work.
1. Find your own style. Seriously, don't just copy someone else. Find what fits your personality, your risk tolerance, your time frame. Like we said, if you can't sleep with a position on, it's the wrong strategy for you.
2. Master risk management. This came up over and over. It's maybe the most important thing. Focus on defense first. Protect your capital. Know your maximum loss before you ever click buy or sell. The upside takes care of itself if you survive the downturns.
3. Cultivate discipline and patience. Get a clear plan, write it down maybe, and then stick to it. And wait. Wait for the good opportunities. Don't chase every little wiggle. Remember, doing nothing is often the best trade.
And 4. Stay humble and keep learning. The market is the ultimate teacher and it demands humility. Except you'll be wrong. A lot. Learn from it. The minute you think you've got it all figured out, that's usually when you're about to get smacked down. Ego is poison here.
Market Wizards really drives home that success isn't about some secret indicator. It's about internal stuff. Consistency, discipline, self-awareness, managing your own psychology.
Absolutely. And, circling back to that really potent Ed Seikoda idea that we get what we want from the market, even if it's losing. Maybe the final thought for you to chew on is this. What deep-seated desire might be influencing your financial decisions right now, maybe without you even realizing it? Is it a desire for action? A fear of missing out? Maybe even a strange comfort in confirming a negative self-belief? Just something to think about. What psychological reward system are you actually running?
That's definitely something to reflect on. Powerful stuff. Thanks for joining us on this deep dive into the minds of the market wizards. Until next time, trade smart, stay disciplined, and maybe check that ego at the door.